Hi everybody, this is our one presentation on the Lewis text for this class. I want you to know that this book used to be the primary book for the previous merged version of this class between building and district level. When we changed and when we split the class, there became two different versions of it. So what I'm going to do to make your lives easier, I'm going to post the building level videos that I did, and I'm encouraging you to take some time and look at them. We're going to focus on a few sections that I expect you to know for exams. Basically what I try to do, I try to take all the main ideas and relate them into ways that are understandable, because I know some of this stuff can be unbelievably dry and difficult to understand. But I wanted to focus on what you know, what I expect you to know for exams for this course. So I have 12 important district level topics. You can read on your own, but they're here, and they're here. And we're going to go through each one, and you'll see what I mean by the numbering. Number one, bid requirements is hands down the most important one. That's where we're going to have a lot of content information, but it's important that you know the intricacies that are behind bids and bid development. In Oklahoma, bids are only required if mandated by statute. District purchases, regular traditional district purchases, are not subject to bid requirements, which creates this disconnect in Oklahoma that's different than many other states. It's different than most of the other systems that exist, but if bids are only required if mandated by statute, that can be an issue and that can be a problem. So what do you need to know? You need to know that if construction is required and if it exceeds $50,000, a sealed bid is required. And we'll go over the sealed bidding procedure. That's what most of this topic is about. But the state also requires written bids for the performance of minor repair work for more than $25,000 to less than $50,000, but the contract has to always go to the lowest responsible bidder. This doesn't have to do with materials though. So the district can actually purchase materials without any say or without any any worries or challenges with it. They can do it without any penalties or issues. So when purchasing new buses, Oklahoma requires that sealed bids are solicited with no direct advertising time or requirement. Used buses don't require bids. Anything that is a federal program, and I thought anything related to Title I or food enhancements, things like that, that will require sealed bids. But it doesn't apply to library books, classroom equipment, even though in furniture, even though those are improvements of a building, they're not capital improvements to a building. So bid solicitations must be open and known to all 20 days before prior to the opening of bids. Anybody who's written the district to bid on projects must be notified that there's a bid that's going to go on. The construction publication must be public knowledge if it exceeds $50,000. So this is basically, it's done in a local newspaper, normally a community newsletter, or could even be done in the district flyer sent home. This is details of the construction, name and address of the district official, date and time and place, and the name and address of the district. So you must, with the bid, have a certified check, letter of credit, or something for 5% of the bid. If a bid is submitted 96 hours before opening or after the bid, it has to be returned to the bidder. That's in order for them to have transparency and make sure everything is done correctly. All bids must be kept for 5 years following the bid opening, or 3 years for the completion of the contract, whichever is longer. The reason the district will do that is if it takes longer for something to be completed and somebody else has to jump in, that could be a challenge and that could be a problem as well when you have to know who the other people that were interested in the project were. So the contract must be awarded within 30 days of the bid opening and signed within 60 days. If that doesn't happen, then you can move on to the next best bidder. If the low bidder is not selected, and remember, we're going for the lowest bidder here because it's the least amount that the district has to pay somebody. This is not, we're not on eBay, we're not on Price is Right where we're looking for the highest bidder. We're looking for the low bidder. The board, if the board doesn't select them, they have to have reasons for them. Meaning, I didn't like this low bidder because they did this in an inappropriate manner. I looked at the work that they did on a district that was neighboring, and I could see that it wasn't appropriate. If there's an emergency, the board can vote to be exempted from notification. If something, damages public health or safety, or something was unexpected, a natural disaster, but 2/3 of the school board has to vote to accept this. So, if a competitive bid applied prior to signing the contract, the contractor must show that they have a bond that says how debts are going to be paid. Required bond for prompt and proper completion of project. Lets us know when it's going to be done, but obviously things happen. A bond for defective workmanship. What happens if something goes wrong? And most importantly, liability and workers' comp insurance. You do not want that on the hand of you. You want that on the hand of somebody else. So when we did the Brimley and Poston chapters, we spoke about mistake happening. Bids can be withdrawn because of mistake. If there's an administrative error, the district must explain the error to the board, and the board can solicit a rebid or district correction of the error. The district has the right to accept late bids, but if the bid is open late, then there can be a problem. Depends if it's an error and certain school personnel did it, but the district is not supposed to accept late bids. So you have to have financial statements. That's a no-brainer. Something that I found particularly interesting. You cannot waive failure to submit a required description of materials to be used. So anything that the construction company does, they have to show the exact materials that are going to be used. They have an estimate of cost of bonds and insurance, but they can't be open more than 96 hours before advertised bid opening. So it has to be done when it was supposed to be open, it has to be done, and it has to be released to the public and open publicly. So somebody is a responsible bidder if they're trustworthy, reliable, financially sound, and most importantly, they can perform the work and they have the skill and capacity to do so. If you don't think that they have the capacity and you can prove it, you can reject their bid and go with somebody else. But if somebody cheated, got estimates from other people, then that's actually a reason why there can be a problem. So if prior work performance shows the bidder is not responsible, you can switch, and that's important. I say that is a big idea. The school board has the right to determine the responsibility and prior character of work and work that's been completed as well. So boards have no rights to negotiate privately. Boards seeking bids must provide specifications that are of certainty to form a fair basis for bidding. Contracts awarded to competitive bids have to be in accordance with the terms of the invitation for the bids. Public contracts left in violation of the law are illegal and void and have no obligation and liability upon the public body to fulfill the contract. Basically what that says, if you're doing something illegal, the contract automatically becomes void. So you can reject all bids if the lowest bid's horrible. If it substantially exceeds the estimate and you know it's not going to get done, or it's way above it, you can reject it. The district can revise project specifications. You don't have to go with a bid if only one is submitted. And if the district says at the end, well, I'm not going to do the program, you can reject the bid as well. So any contracts exceeding $25,000 must be paid prior to work performed and materials stored within 30 days after a proper invoice. Contracts, if payment is not timely, meaning that the district could not afford, the contractor has the right to charge interest of 1.5% a month, and that's their property. The contract could say that they retain up to 10% of the amount due, just to make sure that there is something for completing the job. So, moving on, we're going to look at school bond issues. School bond issues is basically, it's a promise to pay something in a fixed amount of time, and you're borrowing off of it and you're obtaining money. They're paid through tax receipts against property within the district, and a lot of times this is honestly done because of land. When this occurs, school districts must have 60% of voter approval. That's a big and important idea. So to pass a bond to raise taxes or to raise money, you have to have 60% of the population doing it. Career and technology centers have to have 50% plus one voter approval. So bonds can acquire and improve school sites, things like library books, textbooks, uniform, computer software and licenses, anything like that. Purchasing transportation equipment, not repairing, can be done with bond money. So a district can issue bonds at any time for up to 10% of the assessed value of taxable property in the district. So that's a lot of money in some of these districts. The board has to pass a resolution saying that there's going to be an election. Normally it's a special item vote. And the board can distribute information on the bond, the state of the district's bonded indebtedness. That's a big one because if the district's in a lot of debt, you're not going to get public support on that. In a statement of the use of funds from the bond, what is it going to be used for and what's it going to do? So monies received from investors are proceeds. So those are called bond proceeds. So this helps the bond fund needed to finance projects approved. The funds paid to a district by a bondholder is the face value of the bond. The interest rate is the coupon rate, and the time period in which the bonds are outstanding until final payment is the term. So when the board looks for selling bonds, they try to do it in a way that will cost the least amount over the life of the issue. If there's going to be a sale of a bond, then there has to be published a notice of sale of bonds in a newspaper of general interest at least twice. Basically what this is you have a bond at an interest rate that you're trying to get rid of that you signed that was 14.9% for $1 million. Why you would do that, that's beyond me, I'm using it as an example. You jump in and you say, I'll buy that bond from you, and I'll do it at 12.9% interest. Well, that person's going to get the money now, the district can sell the bond, pay the principal back, and then they'll have something that costs the least over the life of the issue. So bond proceeds must be spent on 100% of the purpose of the bond. If there are surplus funds, which do happen, then it has to be spent on the purpose of the bond issue in other categories. So basically, if there was a bond that required you to purchase textbooks or a new curriculum for the mathematics department, if there's extra money, there's a discount, the prices got lowered, and you had a bond for that, you need to put that money towards other curricular-related issues because it's the same line item, but it's going to be a different topic, maybe social studies books or something like that. You can't exactly do that, and you can't control that and say, okay, well, the money's going to the football team, so please know that. Bond funds are allowed to be used to acquire property. So they can pay principal on lease purchase agreements too. So you can use bonds to acquire more property if it's something that's going to benefit the district. Once the bond doesn't exist anymore, it's been paid off, it's destroyed, and it must be posted in a newspaper. So construction costs vary. Expenses change, expectations change. So you want to try to have them as nearly as equal as possible over the length of terms of the bonds. Districts have the right to use a financial advisor when planning bond issues. That'll help them prepare documentation and to confirm the accuracy of the bids received. So, looking at cash management programs, districts do not receive all funds at the beginning of the fiscal year, especially when you're dealing with the federal government. We've talked about this a lot in class. We've talked about the fact that people are sitting and they're waiting for their federal program money to actually come in. When that happens, the district can have a certificate of indebtedness, meaning they know the money's coming, they're just simply sitting and waiting for it to arrive, and investment firms are normally the ones that do this. Under Oklahoma, that's actually not a debt. It's just basically saying, we know the money's coming in, we're not paying interest on it, but we're going to take care of it. This one is more legally related, but I am going to cover it and I'm going to mention it a little bit in here. A board cannot contract with a member or company, individual, or business concern in which a member is directly or indirectly interested in which the member or any member of the board is the board member's immediate family. Oklahoma defines immediate family as the people that are directly living in your house. There are a few exceptions to the ban, and we'll discuss those on the next few slides. So, board members can deposit funds. Monthly payments of utility bills aren't illegal. So, if you work for Suddenlink Communications and you're on the school board, you can certainly keep Suddenlink. Any contracts with the IRS that are nonprofit entities, that doesn't matter as long as they're recognized as a nonprofit. Vocational schools, however, can provide training for a company, but if it has to do with something that it's training on, on something involving the contract, and they're a board member, they have to be somebody that actually abstains from the vote. So, some more exceptions. And I bolded the one that matters the most. First, if a board enters into a lease purchase agreement prior to the time when a board member became a board member, then the district must honor it. If the district has a population greater than 2,500 and the individual or business entity is located within the corporate limits of the district. So that one, if you have a population and then the individual is in the corporate limits of the city within the district, that can cause a problem because then is the district contributing to the community tax base, and what does that look like? If the board member works for the only supplier within the district, they also have to abstain from the vote. If an individual has less than 5% of interest in a company, if the contract is void, even though the member receives neither commission or salary increase or benefits on the transaction with the district, if the contract isn't advantageous to the board, it doesn't make it valid. It's still a barred contract. Boards can purchase supplies when one of the partners is a partner of a board member's in a separate partnership from the vendor making the sale to the district. So let's say you're on the school board in Owasso and you're also on the board of directors from Houghton Mifflin. That's perfectly acceptable. If a member owns less than 5% of the stock in a company, it's acceptable as well. And here's the big idea. Family members only include the members presently living in the board member's household. So fiscal year restrictions, big idea. July 1st to June 30th. That's what a fiscal year is in all businesses and certainly in schools too. Claims are barred against the district for services rendered from the previous school year. So if there's something that's holding up, it's still there from the previous school year. As soon as the year is over, the claim disseminates. If there's a constitutional obligation but not for statutory obligations, that means that if the federal government money is coming in, that can be different. Yearly ratification for any leases and purchases. So if you have one that's already in the books, it has to be ratified on a yearly basis. If there's a collective bargaining agreement or negotiated agreement in place, that can also be an issue as well. So fund balance. The district's fund balance is the money in the general fund on hand at the end of the year. An excessive fund balance is based on different collections, and it's determined by a graduating scale, and sometimes you can have a carryover for funds for smaller districts. This is at the board's discretion as to what is permitted in the fund balance. State auditors are welcome to investigate, as long as there's a written request by the governor, attorney general, or school board, 10% of the voters in the district, or a Section 18F investigative audit, which is conducted by approaching the Attorney General, somebody going up and saying, hey, I think there's a problem with transparency, you need to look into blah, blah, blah. That can be a problem as well. So, securing invested funds, district funds can be invested by the treasurer, but the school board has to adopt an actual plan in terms of what policies they're going to use. If the treasurer should take an investment education program which is approved by the CTCs and the State Board of Education, then they have the right to invest in direct obligations of the government. The treasurer can buy and sell investments and make their own discretion as long as they let the board know. This state lets school districts accept investments as gifts. Not where I come from. It was $250 or less. Investment income must be placed in the fund from which the investment is made, and the investments have to be backed by some sort of collateral, meaning if it falls, we have something else that can secure it. So, looking a little bit at legal stuff, I copied this word for word because it's really just more legalese, but I think it's something you need to know. Judgments against school districts are different than judgments against private defendants. Neither can the board approve a general fund warrant to pay a judgment, nor can the creditor seize assets of the district to be sold to pay a judgment. So you cannot seize assets to pay a judgment. The creditor can obtain a judgment against the school district if the debt was incurred prior to the time when the district had reached its expense limit as set by the budget approved for the district by the county excise board, and there were unappropriated funds available to pay the debt when the debt was made. So that is a big idea. So if there was a debt prior to a limited expense, and then there were funds that could have paid the debt, then we have a challenge and a conflict of interest, because they could have paid the debt and they didn't. so a judgment can go against the school district for not fulfilling their obligations. So other things that I think are important, districts can't say,